So to absorb that and then to have good questions, I appreciate that. So let's go to the market here, because this is Monday, the start of the week, and we've got Steve starts off, then Tom comes in together with Steve at 10 o'clock, and then I come on 11 o'clock. Larry Pesavento comes on at noon Eastern time. Dave White comes in at 3 o'clock, and then Tom and Brian wraps up 4 o'clock till 6 in the evening. So just great shows here at TFNN. You obviously stayed tuned for a reason. So let's give you that reason. That reason says the Dow is down 56 at 12,920. The S&P is down 663 at 1363. The Combo Index is just slowly moving down. It's down 17 at 2959. Apple, did Apple make a new recovery high? There we go. APL. Let's have a look. No, this is going to be interesting. This is going to be really interesting, because Apple, the MACD, is just turning down, but it hasn't even crossed negatively yet. The histogram starting to pull back. The on-balance volume has made a V inverted V formation. The stochastic is at 94%. The 120-minute chart just made a peak E, and it hasn't broken out above 548.21, and yet we're going sideways. So this is going to be very interesting. So what we've done for my subscribers in my opening call, that's my service here at TFNN. Every day, send out 6, 8, 9 charts to my subscribers, and there's an overview that gives the big picture. Actually, for those of you who do get my subscription service, there are 2 overviews. I don't know what happened. I sent one incorrectly this morning. Actually, I do know what happened. It was a mistake. So it's the one from the 2nd, but I immediately sent over the updated one for today, and it says very clearly what we are looking at in the market, what we could expect, and what parameters and what levels they are that are very important. So please get to read that now. And also I go through the Dow chart. That's this particular chart right here. It's a very simple chart. I call it's a very clean chart. What it shows here, I'm going to expand it so that you can see that there's been a beautiful uptrend line that has held. It held right up until 2 sessions ago when the Dow was on the 1st of March, when the Dow at 12,943. It touched that line, closed above it. On Friday, it went below it and closed above this major trend line. Within it, you've got an inside track support level. And what I said is I'm anticipating that there'll be some kind of a cup formation, because there's a rising wedge, and that rising wedge very often produces, I don't know why in my mind I have the two. There's that Aztec caricature. I don't remember the name of it. There's a guy that has this funny dance. In fact, I have it as a light switch. And then there's the Statue of Liberty holding the flame, so holding the torch. So when I look at this, I'm saying to myself, I suspect that this rising wedge formation is going to make some kind of a cup with an attempt to get back towards the 13,000 level. Somewhere in there, if we cannot break into the 13,100s, we will fail, and that will be the deepest move. So this little dip that we've got now is kind of the shot across the bow. They say, hey, be careful. Everything I'm looking at says that there should be some kind of a consolidation. Been saying for about a week now, the upside appears to be quite limited. It's not that we can't go up, but it seems to be limited. We could get a high-level consolidation. And I suspect that we will know a great deal more tomorrow. Now, for me, tomorrow is important because I will be out the office and away from things most of the day. So I'm going to have to set up things for my subscribers in such a way that we're looking at it, and I started to set it up today in a very clear way that says this is a period where maybe you could be short and you could be long, but at the same time, there are so many overhead resistances. There is so much in the way of peak D, E's, and F's in my work in the indices There are also instant restarts, and you don't really have the cues. Let me just talk about the cues for a minute. I'll come back in a moment. Well, let me finish the chart. So the Dow says that this particular candle right here, having gone below the low of Friday, makes the high of Friday, which is 12,997. That whole 12,990s area is going to be a very strong resistance. If it's able to power through that, that's good. But the 13,050 to 13,070s, maybe 90s, is going to be really strong resistance. If it breaks out of that, that's something completely different. Okay. That tells me what's the downside. But if I'm looking at the downside, what I'm looking at is that if we close below 12, what's the low today? 12,883. 12,882.59 was the low of the 27th. So that says that that entire candle of the 16th going back to the 15th at 12,753, that would be the next step if we were to continue low and close at the lows today. If in fact there's another buying spree that keeps coming in to try to push the Dow into this, like a magnet. Look at those dojis, and all those dojis had candles. This, to me, is very important. The 12,983 area, somewhere around there, within 5 points up or down. That is amazing how many times a major market index can stop and give doji candles, uncertain candles, right at the same level. So to me, that is really important. Now, I'm talking about Tuesday. Two things are happening. One is, for me, in a time cycle date. Remember I've been talking about in the weekly charts, I've got a left side, right side, time price match. And for those of you who are listening and you hear about the tiger dollars, now we're starting to do more of these master trader series again. I did a one-day series earlier this year, but I'm planning on doing more. So think about those tiger dollars. Now, the reason why I mentioned that is because we have chart patterns that are very important. In my left side, right side time price match, this week, the week of the 9th of March, says that we've already broken above it, not decisively yet, but if there is a pullback this week, you've got to anticipate that we could break below the 12,876 high of, you remember, this is the reason why I think it's so important, those dojis that we've just seen of May of last year. And that makes it very strong resistance, because if the Dow breaks under 12,769, the 9-period exponential moving average, then even in the weekly, we've got a rising wedge formation that says, be careful. So on a time price match, everything here is saying, hey, just be careful. And here's another thing. There's a pattern that I've had a lot of questions about. It's the ChapmanWave instant restart. That's not going to be very clear, is it? And I don't know if I want to make up another one. Let me just, give me 1 second here. No, it's not that. All right, I'll expand this. If you're looking at my charts in Tiger TV, you will see that there have been, this is incredible. Look at this indicator, just one indicator. The 9-period exponential moving average, when the Qs broke above, in December, I think January the 3rd. No, it was actually before that. Yeah, it was December the 29th. And might even have been before that, because this is a little squash. No, it was before that. I'm going to go to the 23rd. 22nd or 23rd, on the 23rd of December. Not once have the Qs closed underneath that 9-period exponential moving average. We've had peak A, B, C, D, going to the doji high of 58.47 on the 12th of January, had another instant restart, went to another peak D at 62.19 on the that was the 3rd of February, and had another peak D going to the high bar of Thursday or Friday, at 65.08. Now, as I said to subscribers, we are looking at a chance that we could close under the 9-period exponential moving average. The first time it happens is often not not the one that you got to worry about. It's when you get the retest and you can't hold above that 9 EMA. So this is a period where you really have to be very careful. And the IWM was the heads up. IWM started the decline. It started at 83. Let me just go back there. 83.31 on the 17th. Yep, on the 17th of February. And it's pulled back. It hasn't pulled back very much, but it has pulled back. It's pulled back from 83.31 to today's low of 79.42. Not even 4 points. So it is a pullback. It is a start. The stochastics now flattening out. If we go to the 120-minute chart, the 120-minute chart is right on the 200-period exponential moving average. So the period for the IWM right now between 79.42 and I'd say 78.58 to 78.52, that's going to be key support. And there are many signs that say, hey, maybe there's a little bit of a bounce coming in the IWM, and maybe we're rotating. And this is a rotational market. That's the reason why an Apple has been able to, it isn't just Apple, folks. If you go to many of these Dow stocks, there are a lot of Dow stocks that have done great. Now, Apple's made a peak E-top at 548.21. It has not closed under the 9-period moving average, except one little tiny blip, slip, I should say, on the 20th of January at 419.75. Otherwise, the moment it broke that 9-period exponential moving average on December the 20th, that has been one beautiful uptrend support level. Now there's something else that we've got to look at, and that says in the Apple chart, there could be a peak A made. Oh, did I hear the music? 548.21. I'm going to talk about this, a fractionally lower high bar and how that works in the weekly chart, but the stochastics at 94% in Apple. So there's a lot going on. We'll be back at 877-927-6648. Oh, must have been the weekend. I just forgot the number. Love to take your calls. Plenty of time for calls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be at the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. Let me just finish that Apple chart for a moment here. The reason why I was suspecting that Apple could, in fact, start to pull back at this particular point is that there was a high bar on the 1st of March at 548.21. Then there was a doji candle. So there's a doji before and a doji after. It says that Apple's getting a little bit tired. Doesn't mean to say it's a major sell, just as tired. Had a sharp pullback today underneath the 9-period exponential moving average. But the 120-minute chart has given some beautiful signals. It went to a peak E last Friday and then just kind of meandered. So this is going to be something that I need to watch closely because the major support is at 510 to 508 on Apple. If it breaks that, it's going to go quite a bit lower. But there could be a little rectangle, high-level consolidation occurring right now, maybe for the day or two until the announcement comes, I think, on Wednesday. Now, listen to this. It's really important to me. I did get a call yesterday from Ed Young. And Ed was telling me that tomorrow, that's Tuesday, he'll be going in for this major operation that he's been waiting for months and months to have. It sounded actually quite good. One of the better times he's sounded for quite a while. And all I can say is that we need to give as much, just a great friend to TFN, as much white light as we can all day tomorrow, and for his recovery. And it's a very serious operation, and let's hope that everything, and this really could be a game changer for him. If it works out, it's fabulous. It'll be absolutely fabulous. So Ed has just been just a wonderful asset to TFNN and the Den of all the years, and not been well. And certainly this is a moment that we all would love for everything to succeed as best it can. So now let's go back to the market. When we are looking at key indexes, if I go to the CYC, which is the cyclical index, for me a very important index. It made a peak E top on Thursday, on the 29th. Now the candle that we're looking at, because the MACD, so this has been my biggest concern, is that in many of the indices, especially the Dow and now the Morgan Stanley cyclical index, that doji high at peak C on that was February the 9th, at 1018, pull back sharply, made a slightly higher high to peak D, pull back again and made a slightly higher high to peak E on the 29th of February, a month later. And look where the stochastic and MACD are. They are turning down sharply. So it says two things. Either that the technicals are failing and that the price is held extremely well, and that if the price still holds well, and this candle here will define the parameters, 990 will be the low on the 16th of February. Right now it's at 1002. If that holds and the stochastic goes all the way down and then starts to rally, that would be a positive. But then on the other hand, when you look at the volatility index, the VIX, I've been talking about this for a long time, that volatility index is up there, $1.36. It was actually up quite a bit, even before the market started to pull back. So I'm saying to myself, aha, we've got to watch this very closely. Because if the VIX is not able to get to 20.30, if it's certainly not able in this week to break 21.98 to get into the 22s, then this pullback is going to be short-lived and contained. If it starts to break out, I'm making it just as simple as that. You get into the 2250s on the volatility index, and this market will be pulling back. The Dow will be going down to the 10,700, 10,500 area, and the S&P will go down to the 1340s, 1330s. So to me, the parameters are really quite clear. Now, here's another thing that was important. The IYT has started coming down way earlier. It started its pullback. That was a ChapmanWave alternate wave count. That was the flat-based restart at 96.13 on the 3rd of February. It held the support at 90.84, 90.89. That'll be the clue. If the transports break underneath 90, then 89.37 will be the very big, important 200-period exponential moving average support. Now, if you put that into context, we have to look at crude oil. Crude oil right now, 877-927-6648. Don't forget, that's the number to call. He's holding quite well. It's down 28 cents. Made a peak D. It's in this pattern that says, you might just make a high-level consolidation if you don't close underneath 104.84, the low of the 29th of February. That's one situation. The other is that the weekly is only in leg C, perhaps peak C if there's no new high this week. So I'm going to watch this real closely, because if there is a leg D up, the candle that we'll be looking at is that ChapmanWave Roman candle of May of 2011. With a high of 114.09. I'll be back, 877-927-6648. Love to take your calls.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. Dow is down 72, S&P's down 8.92. Let's go through something else. The New York Stock Exchange made a peak F-top in the ChapmanWave. It made a peak F-top once before on the 26th of January, pulled back just for 2 days underneath the 9-period moving average, didn't close underneath it, held it beautifully, went all the way to this last peak, F6 highest peak again at 8,210.26, and now it's pulling back quite sharply. This is the third day. So there's the difference. Now, this is going to be very important. MACD stochastic are very poor. 71% in the stochastic, MACD is expanding. That says you can't turn around without bumping into a lot of resistance based on the slowness of that yellow line turning around to cross the red line because it's just so wide. So it's going to take a little time. So you'll bump into resistance until that can happen. The most important aspect here is that you've got a peak F in the 120-minute chart. If it breaks under the 8,062 low of the 23rd of February, it's going to go quite a bit lower. Now, this is going to be very important. I have 7,883 as really important 200-period moving average resistance that it hasn't even been to in the 120-minute chart since it broke out above it in December the 21st, 22nd, that area. So that would say that if it was going to do that, then the level to watch in a time price match would be, for some support that is, would be in a it's a 120-minute chart. Yeah, so that could happen if it happens before, take it right now. Yeah, if it happens before tomorrow afternoon's close, that's very negative. If it happens by Wednesday, it means that we are coming down, but we don't yet have the velocity on the downside. Now, what would be velocity on the downside? If the Dow closes down triple digits today, not just 101 points, but like 135 to 157, something like that, and then triple digit down tomorrow, that'll say, okay, you got price and you're probably going to have time on the downside. Anything else says, you know what, there are still buyers coming in, so you got to watch out for those sudden reflex rallies to the upside. More importantly, let's look at the upside. If you're looking at the TLT, which is the 20-year Lehman T-bond fund, which is in a decisive down channel, why are bonds down 30? Why is the TLT down 33 cents, and the bonds themselves are up 2 seconds? Down 3 seconds. I mean, what's going on with that? For a long time, we've seen money come out of bonds going to stocks or stocks into bonds when you've had big moves in either one. So if the TLT starts to break, that's the Lehman 20-year T-bond fund above 119.14, that will say two things. One is that money is probably going to be going back into bonds and out of stocks. Even if it's just a short term, it doesn't necessarily have to happen on a longer term basis, but at least on a short term. If the stock market pulls back 135, the S&P down 15 points, and bonds actually fall, that's going to be very unusual. We haven't seen that. Something different is going on, and we have to study that. If the dollar, excuse me, the dollar is down 13 cents now. It's had a very nice move with a 120-minute chart, made a peak D, second peak D. For those of you who are doing your analysis, remember I like to use 120-minute charts. I don't get full 120 minutes because there's a time period between, is it 4 to 4:15 or 4:30? I'm not sure. 3:30 to 4. But it doesn't matter. It still seems to always work out, and I've used it for, 15 years, 17, 20 years, I don't know. So that's what I like. So this is the DXY, and this is the index. If you go to the EUR USD, look what's happening here. Got a little bit of a rally. So something's going on here that's different. Normally what you would find is that the euro dollar, remember I talked about that C1, C2 double top formation where it just misses to give me about even 1 penny, or in this case by 1 tick, that leg D up. I still count it because the stochastic and MACD were falling. But what I'm looking at here is that the weekly chart is showing that there's still some strength. And that's going to be very interesting. And that's the reason why I'm saying this is not going to be an easy market. Because if at this particular point we've got a rotation going through that manages to keep certain indexes up, when in fact you would anticipate that they'd be falling down quite sharply. So I believe that until I see the order paths like AZO, AAP, GPI, all those, the auto part sector, which has been on, they've been the great winners, until they start to break down, and until I see the restaurant stocks start to break down. That could happen at any second. The very, very best sectors, I think I have to look at this and say rotational market. You can go short anything you want if the technicals indicate that, but at the same time, be careful because there are still some strong stocks. Let's go to Chris in San Antonio. Hi, Chris. How are you?
I'm doing good, Basil. I just wanted to take a look at United Healthcare.
Okay, UNH is the symbol for United Healthcare, and it's trading right now. This is another one, very fascinating. It has been on fire, right?
Yeah, it won't turn back.
Well, this is what we're going to look at because this is the moment. This is typical of these stocks that have done extremely well. They are making high-level consolidations in the daily. The monthly on UNH, which is United Health Group, is trading at 55.51, down 33 cents. Now, this had an all-time high back in December of 05 at 64.61. It made a kind of a rectangle formation, sideways move for 2 years, almost 3 years. And then in December of 2007, so that's 2 years, it went to 59.46, and then it made this very deep pullback down to 14.51. That's really a deep pullback. But then what it did is it went peak A, minus, started again, A, B, C, D, E, and F is occurring as we speak. So this is one of those stocks, and this is going to be a tell for me, because if the healthcare starts to pull back and it's leg E, did it make a new high? No. It could be. Now, that's what I wanted to talk about before. When I spoke about Apple making a fractional lower high this week, the UNH chart, 56.16 was the high last week, 56.08, 8 cents lower this week. So if it was 9 cents higher today, it would have extended leg E. Now I have to watch this really closely. The stochastic's very strong at 97%. MACD's very good. Now the daily. So do you have a position or not?
No, I've just been waiting for it to pull back to get in.
Okay. So now the pullback that's coming is going to be the most difficult to get in for two reasons. One is because there is the chance that it's going to make a peak E in the weekly and maybe a peak F in the monthly. You know what that means in my work? That means you've got to be real careful. But the daily, which made a peak E the other day, the sixth highest peak at 56.16 on the 27th, if it can hold, and this is the only way I will do it, if UNH can hold 54.66 on a close in the next 2 days, and in fact just hang around this area, that'll say it's stalling with very good technicals. If it takes it out, and not only does it take it out, it plunges below the doji candle of the 15th of February, 54.22. In other words, if it closes under 54, I would say to you, hold off. You're going to have to see how the 53.77 level in the 9-period exponential moving average holds. The real thing I'm saying to you right now is that I don't think I would be buying this now because the risk reward is just, it's tough. Because it could pop maybe once, it could even get to 56.80, maybe even 57. But there's a real good chance that a chunk of the upside is done and it needs to consolidate. So I'm going to be putting it on my list. I would do nothing with it right now, even if it has a little bit of a pop. What I'm going to ask you to do is, if by Wednesday it hasn't broken 53.77, call me Friday and let's have a look at it again. Because if it holds really well, then it's going to say, hey, money managers have not given up on this. It's a high-level consolidation, and then I will have a plan how to maybe execute 1, 2, and maybe even a third to 3 small positions and how you can do it. But right now, all I can say to you is if you wanted to trade, you could buy it 1 penny above 56.16 for intraday work and then just raise your stop and either get out of the end of the day or very soon, and that's all I can do. So I'm going to say to you, it's on my list. It's been a fantastic stock, and I do not want to think of shorting one of the best stocks in the market, but at the same time, I'm just not sure yet where I would buy it because I need to see how it holds. And the 120-minute chart is indicating that whole 54 area is going to be very important because if it starts to slide, it might just take a breather of a week or two, and then we're going to watch the 53 to the 52 support. How it holds that is going to be really important, as well as looking at it as a sector play. So thanks for bringing it to my attention. My recommendation right now is if you haven't got it at this point, hold off. There will be an opportunity. How that opportunity presents itself is going to be really important when you're talking about one of the best stocks in the market, but making leg F in the monthly, E in the weekly, and E in the daily. So I'd just hold off a little bit.
Okay, I'll hold off.
Hold off for the moment, yes. And what I might even recommend, if it starts to pull back, I might even recommend an option call because it'll be an inexpensive way of playing it for a real sudden retest of the highs. So let's hold off for the moment. If it does break out, I don't know what to tell you. I'm just saying that I think it's a high risk, low reward possibility right now.
Okay, well, thanks a lot, Basil.
Thank you very much, Chris. That's Chris in San Antonio. Now, folks, this is really important. When you're looking at the market, I think it's important to get the overall picture. And to get the overall picture, the month of March, which very often has been kind of a whippy month, but the month of end of April, beginning of May, we've seen from last year is the month that you really have to worry about. Sell in May, go away. What I'm looking at is my weekly charts. And in the weekly chart, I can't help but say to myself, the way the market has gone to a new recovery high under all these different negative scenarios that are presented. I wish I had a little balloon that I could just pop up and say, Greek bailout, this, on and on and on. Look how the market has rallied from the low of October of 2011. Try getting back to and going above. This is the Dow, above the 12,876. That says to me, something else is going on here that we've got to be aware of. And it says also that when we are looking at markets, the overall picture, the trend, the tide, I like to say that the tide, as someone mentioned this to me on Saturday morning, said, I loved when you were talking about in your webinar that when you're looking at a tide, if the tide is going out, you can throw a piece of driftwood out, it will not come to shore. If the tide is coming in, you can throw a piece of driftwood out, and it will not go further out. It'll just keep coming back to shore. Within that, you notice that there are always these little waves. You can surf those little waves, but you really want to be looking at the tide. Now, a tide is different to a current, as I read it, because within the current, you can get caught up in riptides, in those aberrations. So I'm looking at the tide, and I'm saying, hey, my weekly chart at this particular point, this is right now, by the end of the day, it could be different, is really strong. There is a rising triangle, and it says, yes, you could pull back. It says, yes, 12,771 could be the first support. Yes, it says 12,462 on the 20-period exponential moving average could be major support. But I'm also looking at the stochastic, and that's at 96%. It's getting a little tired, but it's still at 96%. The MACD is still holding really well with the beta between the difference between the fast move, the 9-period differential, and the red line, the slow moving average. That's really strong. So let's go to the Qs, which have been the strongest. And as I said before, it isn't just Apple. You saw the other day Apple pulled back during the day. In the meantime, the Qs held well because there are many other stocks within the Qs that are actually doing very nicely. Now, if you look at the Qs, the weekly chart at leg D, perhaps peak D, if there's no new high above 65.08, the high of last week, that says be careful. But at the same time, it has 62.28 support, and then that whole breakout area of 59.80s, 60, is going to be the support. The monthly chart is still in the up channel. Beautiful, going towards the top of the up channel. Can it go higher? Yes. Can it go lower? Yes, of course. But now let's look at the tide. The MACD has crossed positive. Stochastic is at 86% in the Qs. To me, that is very important. And what I'll do when we get back, I still want to take call. Hey, I'd love to take your calls. I'm going to take a look at the Volatility Index weekly chart, and we will discuss that when we get back. So, Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to take your calls, and we will look at the VIX.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Yes, absolutely. I do recommend. Stay tuned for Larry Pesavento. Just a wonderfully informative show. Just really great. Now, let's look at the VIX. The VIX, the volatility index, I had a time price, left side, right side time price match, which went to exactly this week, which would say that there's a test of the 14s coming. It held really well for the last 4 weeks, just above it in the 1610 area. So that tells me that if there is to be a break to the upside in this market, that if the Dow is able, I don't know how, but if it's able to break into the 13,100s, you will start to see that volatility index decline. But if it doesn't do that, in fact, the volatility index breaks out above 2198, you've got to be careful. Now, I was asked in the den if I would look at high-grade copper. I look at that all the time. Now, high-grade copper weekly has made a peak C, really nice retracement, went to almost the $4 level, 3.95 last week. The 3.9895 high of the week of the 10th of February, that's what it needs to take out for leg D. Holding here is really nice. I mean, you know, when I try to put this puzzle together, I'm saying to myself, there is still internal strength. I don't want to get too far ahead of the game. I don't mind getting protection for my subscribers, which is what we've done. That's fine. But to go heavily short, I'm just not quite there yet. I could go there, and that would say that there will be a sharp 2-week pullback. That's why I'm saying today and the next day, tomorrow, Tuesday, are really critical. They're critical for what they, not for what they won't do, it's for what they do. In other words, if 12,860 is hit in the next day or two on a close, that's as the Dow starting to move quickly towards that 8,700, 8,500 area. If the S&P is able to hold above 13, say 53 in any pullback now, that's also a good sign. So I have to put this together and say short-term, high-grade copper, yeah, it's pulling back, but it's holding really well. It'll break down if it goes under 3.8. Even more importantly, I'm looking at it and saying that if it does pull back, there's major support in the 3.77 level where the 200-period exponential moving average is. But if it's able somehow to get above Friday's candle, then it's going to try to make a leg C up, and that would be really positive, economically speaking, I'm talking about, and maybe for the market. Now, when I get back to the TLT, so I finished the VIX, yep. The TLT, I gave the parameters for that. Now, let's go to the dollar. The dollar, in fact, has had a very nice, another pop-up rally. The weekly chart made that peak E. in a left side, right side price time match to the week exactly. Right there, it was the week of the 13th of January at 81.78. High level consolidation. Is it going to produce the cup and handle pattern? So I'm putting that in. Well, that's the pattern I'd be looking at. And if in the next 2 weeks, the dollar is able to climb above 80.60, 80.80, wow, it's definitely going to try to retest that 81.78 level. That could be the handle formation. Now, that says that the euro could pull back pretty substantially if that's going to happen, and to retest the lows of 1.26. Meantime, the euro is holding quite well. The MACD and stochastic and the weekly chart are acting quite well. Daily had a very sharp pullback, but it's got a nice candle. Day's young. Hey, by the end of the day, we could be down at 1.31. It's at 1.322 right now. I want to see the euro try to get above 1.329. Now, that corresponds to gold, because if gold actually manages, let me just do this before we go off. Yep, there's the music. So if gold is able, instead of, I think there could be a rectangle formation here, and if gold is able to get to the 1.733 level, that is the gold April. If gold, euro, and if they rally, that should help the market. If they start to pull back very sharply, and the three bears go up, VIX, Dolly, and Bondi, look out. So those are my parameters. Thanks for being here.